Let's focus then to MF Corner, and today we're going to put the spotlight on dividend yield funds. Are these those funds that pay out dividends regularly, or is it are these funds that invest into high dividend yielding stocks? That's the confusion that most investors have when they write into us as well. So we've got Tirendra Kumar, the man who knows all the answers, CEO of Value Research, who's here to demystify dividend yield funds and whether they should be a part of your portfolio at all or not. Hi Dhirendra, what's the strategy behind these dividend yield funds? How do they work, and more importantly, what kind of investors are they best suited for?
Yeah, as you said that, most investors think that a dividend yield fund should be, sending dividend checks more often, but that is actually not the case. The real thing is that, most funds are growth oriented, and here is and these dividend yield funds try and emphasize high yielding stocks in their portfolio. And what has happened in the past 4 or 5 years that we haven't seen any secular bull run, we have seen intermittent rallies, and so these stocks, they prove to be companies with superior cash flows, and they are surely, low beta stocks, so they have provided greater stability, they have performed very well. And because these fund managers try and have a portfolio which is highest yielding at that point, so that we see a very active churn and shift towards superior companies or companies going out of the valuation range with low yield. So that has translated into substantially superior return in their respective category from these funds, and they have gained great prominence, which wasn't the case in the bull phase of 2004 to 2008.
Dhiren, so is this a good time to invest into dividend yield funds, considering the markets are pretty volatile, but generally trending up ones? And what would be your top picks?
Yes, I think dividend yield funds have been able to build a reasonable case for themselves, and I think if you have a large equity portfolio of funds, then I think it could well be 35% or 50% of your portfolio. If I have to choose one or two, I'd say Birla Sun Life dividend yield fund or UTI dividend yield. They make a reasonable case for themselves.